Good morning, ladies and gentlemen. My name is Alex. This is today's European session outlook. We will start with the North American markets. We had the Markit manufacturing PMI 0.2 better than expected, and new home sales month on month 0.064 million worse than expected, and new home sales change month on month 5.7 less than previous. The Dixie is down to 97.06 from 97.28. U.S. stocks fell for the fourth straight session on Friday, leaving indexes with the biggest weekly losses in months. The USD also finished broadly lower on Friday, after several sessions of range-bound trading, as traders held off on taking large bets in the currency market ahead of a meeting of Federal Reserve policymakers this week on Wednesday. Dow Jones 15 points down, Nasdaq 76 points down. Today we'll be expecting durable goods orders and durable goods orders ex transportation. Onto the EU markets. In Germany, the Markit manufacturing PMI came out 0.4 worse than expected, and in the EuroZone 0.3 worse than expected. We also had the Markit PMI Composite and Markit Services PMI in the EuroZone, both coming out slightly worse than expected with 0.3 and 0.4 points. In Germany, there is news that they are willing to discuss the creation of a EuroZone finance minister who would have his own budget and raise extra taxes after European Commission President Jean-Claude Juncker last month laid out a vision for tighter joint control over the currency zone's economies, including a common Eurozone treasury one day. DAX 30 is down 140 points, CAC 40 is down 40 points. On to UK markets, the sterling gained strength or moved sideways against the other major currencies, with the most notable movements being GBP Australian dollar 19 points down and GBP New Zealand dollar 13 points up. Alright, the FTSE 100 moved down to a total of 155 points on Friday and closed at 64.88. The 10-year gilt yields were at 1.934% on Friday, minus 3.73%. Investors will be waiting for tomorrow's preliminary GDP data quarter on quarter, year on year. Onto the Asian markets, Australia's credit rating could be cut if the budget fails to improve as expected, while S&P affirmed the country's AAA rating with a stable outlook. It said that view is premised on the country maintaining conservative budgetary policies. A major setback are the declining revenues from key export resources such as iron ore, which have seen prices slump due to oversupply and slowdown in the Chinese economy. The high level of external indebtedness is due to Australia's key credit weakness, the increased private borrowing. The Australian dollar was the worst performing major on the opening of the market. It started the month at 0.77 USD and hit a 6-year low at 0.726. It's expected to go as low as 0.70 due to pressure from China and news from the US. And the New Zealand dollar ended up higher during last week's trading despite the interest rate cut. In Japan, Deputy Governor Hiroshi Nakasu remained quite upbeat about the central bank's inflation target of around 2% in the near future. He maintained that inflation will reach the Bank of Japan's ambitious target sometime between April-September next year, while signaling that there is no need to expand its already massive monetary easing program soon. On to commodities, China repeated a call Friday for talks with Japan over joint development of gas and oil resources in contested waters in the East China Sea. China said it was justified to conduct oil and gas exploration in its exclusive economic zone, the foreign ministry said on its website, claiming it has been developing the same area since 1970s, and Japan has only recently raised objections. Gold slid more than 1% on Friday to its lowest since early 2010 as fresh strength in the dollar prompted another wave of selling. Oil also ended lower, moving at the fastest pace in 3 years as glut expands. U.S. output has held near a 4-decade high, while largest OPEC members pump at record rates, keeping the market oversupplied. Gold had a range of $24, trading at $1,103 now. Silver had a range of 30 cents at $14.70 now. Crude oil had $1.30 range at $48.16 now, and natural gas is trading at $2.74 at the moment. Opened with a gap of a few cents, had a range of basically 5 cents. All right, thank you everybody. This was today's European Session Outlook. My name is Alex, Senior Account Executive. I'll talk to you next time. Goodbye.